Hey, good morning. My voice is a little rough still because you're the first person I've talked to all day. It's like 6 in the morning here. It's pitch black outside. Everybody's asleep except for me. But I thought I would do a video to get my slope duties complete because I've got a busy day ahead with La Familia. Um, so I've been kind of in a constant state of soul searching since the close yesterday because, the first week of the year was pretty disappointing for the Bears to say the least. I mean, all 5 days were up, and the bookends to that week were particularly nasty because on Monday, sort of all the excitement from the last day of 2009 was wiped out because we had such an explosive rally. And on Friday was even more bitter because, the unemployment report was much worse than anyone expected. And there was a brief, tiny dip, and then, the market just continued to soar afterwards. And so I'll talk a bit about that and what I'm trying to figure out what to do. But as you can see here, this is the NASDAQ composite. The strength in the market for the past 10 months has really gone unabated. Now, from my point of view, and obviously it's my point of view, I'm not speaking for Yosemite Sam. I mean, everything I say on the blog is from my point of view. As a chartist, I mean, this is the graph only gets more beautiful. Now, if this price cracks this trend line and cracks this trend line and keeps going higher, obviously the beauty is ended forever because these two lines here represent very important technical levels of resistance. But if we went up to, I'm just guessing 2,500, that obviously it makes the whole thing moot. And but we're not there at this point, and this seems just horribly overextended. But it's been extended for quite some time, and it just keeps getting more so. And I was trying to think, when have we faced something like this before? And at first I thought, well, what about like the internet bubble, this whole thing right here? And, let's face it, it isn't anything like this. I mean, this is just amazing looking at this, and that's a real bubble. So we're not in that kind of mode. We are sort of in this kind of mode here, where following a large drop, we've had a very big push, and this one lasted back in '04, almost to the end of January, before it dipped down a little bit. Certainly not the beginning of any kind of bear market. This was just the beginning of this kind of sawtooth pattern up to the 2008 highs. But all I can say about this particular chart is that from these two very important trend lines, we're certainly at the very high reaches. A little bit more room to go possibly, but we're way up there. Now, so what do you do? What do you do when day after day the market seems to go up? What do you do when the bulls, in spite of any news that comes out, seem to have the world by the tail? And one thing I've continued to think about is, well, what I'm not going to do is just willy-nilly close out all my positions, because the positions I do have, it is very Darwinian. I mean, they've survived this far, and any weakness in the market, they'll do sensationally. I mean, I figure if they've gotten this far, they must be forged in steel. But I have been considering, what about taking a very, like, one or two very large, long positions just to balance things out, just to make the weighting more tolerable. And like, here's UWM, for example. And I have this sort of internal dialogue, which is, well, why not buy a lot of this? Well, why should you? Well, because it just seems to keep going up. Well, why would you buy something just because it keeps going up? Well, why wouldn't you buy something that just keeps going up? The reason I'm going through this is because in this dialogue, I have certain bases for going long stocks. I mean, for example, this stock I've mentioned, AB, which I bought more of on Friday. This is a pattern I can get my arms around. I mean, I like this. I own it. I'm long it. I intend to hold it until it's stopped out, and I'm all for owning stocks that look like this. Um, I'll show you a few other positions. I'm long. Um, Oops, these are. I'm sorry. That's my bull pen, not my actual long positions. Um, so here's AXL, and here's Eastman Kodak. So, and here's one in particular I find interesting, U.S. Airways LCC. So there are charts that I own that I do like, that I don't have to sort of talk myself into acquiring. These are just nice patterns on good expanding volume, and I like them. But the size of these positions, the quantity of these positions is very small compared to my shorts. So, in terms of being sort of a salve for an up day, it's a band-aid on a very big wound. So it doesn't help that much. So as I said, what I do keep considering is, should I get into something very big like this? And it's getting more likely because, as I have mentioned in the past, the idea that we may be in for another, 700 points on the Dow, a push for another, say, 2 months, is entirely real. And I don't want to spend that entire time flat, and I don't want to spend that entire time frantically managing stops on a myriad of short positions. I would rather keep the shorts that exist, but at the same time balance things out with any big longs that look compelling. And I keep emphasizing big because I don't want to buy the quantity of longs individually that would be required to balance out all the shorts. I'd rather take on one or two very large index positions, simply, as I said, to attenuate any bleeding from continued strength because of all these. But yeah, looking at this, it's a very smooth pattern, but a very strange pattern, because as you can see, we've got this kind of, this is the SSO, the ultra bull on the S&P. There's this kind of gentle lift higher. So it hasn't reached any sort of mania or a bubble or froth. It's just this kind of almost a sea change, and that is cause for a lot of caution, because as I also pointed out a couple of days ago, we're seeing strength in places that are a bit surprising, like the financials have not kind of rolled over at all. Of course, Thursday, General Electric was a big reason for that. That we're seeing these mega cap stocks that have tripled in value since the low. And although looking at the long term like this, it's very evident that this is not poised for some kind of bull run. The question is, how long will the counter trend last? One last thing I'll say is that a gentleman, I did something yesterday I do almost never, which is I went on a long bike ride just to kind of clear my head. And while I was doing that, a reader sent me some information on NeoWave, which I know a few of you know about, and he strongly recommended them. He said that their forecast has pretty consistently been for a rise to about 1,200 on the S&P, and then a subsequent drop, actually more dramatic than what I had talked about yesterday. And anybody who wants to comment on NeoWave and your experience with them, I'd appreciate it. I've given them a trial subscription just because I'm curious, I'm intrigued. But given their predictions in the past and how closely they've aligned with reality, I'm pretty impressed, and I'm interested to see if that would be of aid. So anyway, getting near the 10-minute mark here, I'll sign off, and I'll let you know what I figure out to do on Monday, because gotta get a plug on this. So anyway, have a good weekend, everybody. Bye.